Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, traders. Good morning and welcome to London session open. Today is October 27th. We're going into a big week. This week we have a lot of interest rate decisions from different central banks. But of course, our eyes remain on the Fed, the Federal Reserve of the United States. Today we will be discussing, as always, the weekly high impact news calendar. Guys, I'm trying to share. Please, can you share my screen? Okay, so we're going to discuss the thank you. We're going to discuss the weekly high impact news calendar, and then after that we'll go through the charts. And of course, I'll take your questions if you have any. So let's get to it. All right. We start with Monday. Today, what do we have? Okay, so we have the durable goods orders for the month of September. The previous reading is minus 2.7%. If this number comes in positive, like 0%, or for example 1% in the positive, this will be a good news or release for the dollar. It will be positive for the US dollar, and we will see it going up. This news will be released around or at 4:30 Dubai time, 4:30 p.m. And we have the new home sales. Last week we had the existing home sales, and it came in better than expected. So this week we're looking at the new home sales. The previous reading was at 800,000 units, and the forecast is 710,000 units. So what does that number mean? It basically means if there are new home sales, like they're selling new homes in the US, it means that the economy is still healthy and they have money, and money is circulating in the economy, and they're buying new homes. So that's pretty much it. If this comes in higher than expected, it will be positive for the US dollar. If it comes in negative or less than expected, or lower than expected, it will be negative for the US dollar. All right. So let me check if you have any questions. What about gold? Will it come again for 10% rejection? We'll get to that in a second. We're going to discuss the technicals after we finish the calendar, which is very shortly. Nice to be here. Good to have you, Paul. First high impact news, right? All good. All right, so we move to Tuesday, which is tomorrow. We have the consumer confidence. This is a very important number. It shows the consumer's confidence in the US economy. The previous reading was at 94.2 points. The forecast is 93.9, which is slightly lower than the previous reading. So if the actual came in higher than the forecast, it means that the American consumer has more confidence in the US economy, and spending is going well. So this is actually a positive reading for the US dollar. If it comes in lower, it's the exact opposite. It means that the consumer confidence, or the American consumer, is less confident about the economy. That's why this would be negative for the US dollar. Again, let's move to Wednesday. Okay. Wednesday, we have so many things. First of all, we have the Bank of Canada interest rate decision. The previous reading was 2.5%. The expected is a cut of 25 basis points, so the forecast is 2.25%. They're expecting to cut 25 basis points. The actual most probably will come in at 2.25%, yes. And they will cut 25 basis points. as well as the interest rate decision from the Bank of Canada, we have the interest rate decision from the Fed, from the US, which will be on the same day, but later that day at around 10 p.m. Dubai time. So the previous reading was 4.25%. The forecast is 4%. So they're expecting to cut 25 basis points. And the markets are now pricing in a almost 100% chance of a 25 basis point cut from the Fed and the Bank of Canada, by the way. The USD, let's move to the next one. We talked about the Bank of Canada interest rate decision. So if it comes in as expected, most likely there will not be a big move. But if it comes in like higher than expected, so they don't change rates in Canada, it stays 2.5. This will be positive for the Canadian dollar. So the USD CAD pair will drop. Why? Because the Canadian dollar gained strength against the USD. So USD CAD will go down, which means the CAD gained strength. And the opposite is also correct. Now we have the crude oil inventories on Wednesday as well. The previous reading was a shortage of 0.961. And we saw some recovery in the oil after this release last week when the reading came in at minus 0.961% million barrels. The forecast number is not released yet, but if it comes in like at a surplus, this will be bearish for the oil. If it comes in at a shortage, so minus 1 million, 2 million, for example, this will be positive for the oil because it means one of two things. Either the demand is high or is getting higher, or the supply is tight. Both of them are good for the price or positive for the price. So if that happens, if we come in at, if the number shows a shortage, it means that there's either too much demand or too tight supply, which is positive for the oil prices. But if it comes in at a surplus, so the number comes in, for example, 4 million in the plus, it means that there's too much supply and not enough demand, so that's negative for the price. Then we have the FOMC statement, which is the statement of the Federal Open Monetary Committee. They will announce what they will be doing or what the future of interest rates will be in the US. And people and investors, traders watch this very closely because they try to hunt for hints inside that statement. They start to look for hints about the future of the interest rates in the US. So that's very important. And obviously, the interest rate decision, we already discussed this. I told you they're going to cut 25 basis points. That's almost a guarantee. And after the interest rate decision, like half an hour later, there's going to be a press conference, and Jerome Powell will be addressing the press and answering their questions, as well as reading the FOMC statement, which I believe will not be very different. He will he will say again that they're data dependent. They're not going to move without seeing any data. They're going to remain dependent on news releases. But they have a problem now. We're still in the government shutdown. So let's see what he has to say, Jerome Powell. What Jerome Powell has to say about the government shutdown, because there is or there has been a data blackout, and that makes the Fed's job so much harder. He might say, okay, we're cutting 25 basis points, but you know what? We're not cutting any more interest rates until we see the real numbers, until we get the releases. So this might be very bullish for the US dollar. If he says that, it will be very bullish for the US dollar, and we will see a recovery in the price of the DXY. Okay. Okay. So do we have any questions? Okay, not yet. Let's move to Thursday. Okay, so we also have the Bank of Japan interest rate decision. The previous reading was 0.5%. The forecast is 0.5%. And I think the actual will come in at 0.5%. There is no change. The Bank of Japan has been known for decades for being very loose when it comes to monetary policy. So they have very low interest rates, and they enjoy the low rates because it helps them with the international trade. So their cheap currency makes it easier for them to export. Okay, so people buy their currency and import from them. So it's easier for Japan to export because of the cheap Japanese yen. Okay, so I think it will remain at 0.5%. It will remain unchanged. Then on that day, on Thursday, we have the German GDP, which is the growth in the German economy for Q3. So that's quarter over quarter. The previous was 0%. It did not grow in the previous reading, and the forecast is also 0%. So there will be no change and no growth. And after that, we have, so yeah, if it comes in higher than the forecast, so if it comes in, for example, 0.5%, this would be very positive for the euro, and we will see a bullish movement in the euro. All right. Then let's move to the next one, which is GDP from the US. That's a very important number. The previous reading was at 3.8%. That was the advanced GDP. So the forecast is 3% this time, which is a big drop. Let's see. Let's watch this number. This number will be very important because if it comes in lower than expected, that's a big problem for the US dollar. If it comes in higher than expected, this could mean a start of a rally for the US dollar. So that's very important. One of the most important numbers I'll be waiting for personally. So if the growth is good, this means that the Fed does not have or isn't in a rush to cut rates because they usually cut rates to boost the economy. So if the number comes in positive, if it comes in positive, it means that the Fed shouldn't be rushing to cut rates because the jobs market is good, the inflation is still under control, and the GDP or the growth is still good. So they wouldn't be in a rush to cut. All right, so let's move to the next one, the German CPI, which is the German inflation. So the previous reading was 0.2%. The forecast was 0.2%. That's for the month of October. So if it comes in higher than expected, that could mean that the ECB should be looking to keep the rates high for a longer period of time. If it comes in lower, it means that, okay, they have room for growth. If it comes in, like if the German CPI comes in lower, it means that they can cut rates to boost the economy if the growth isn't as good as they want it to be. Okay. What's the next one? Okay, so a London session just opened. Let's take a look at the reactions. Still all good. No crazy moves. We'll get to the charts in a bit, but let's finish this. And of course, on that day as well, on Thursday, we have the interest rate decision and the deposit facility rate from the ECB, the European Central Bank. The previous reading was at 2%. The forecast is 2%, but the interest rate is 2.15%, and the forecast is 2.15%. So the good thing is that they have a press conference after the interest rate decision, and before that, right before the interest rate decision, they have the readings from Germany. They have the GDP and the CPI. So if they after they see those numbers, this might change a lot of answers in the press conference. So Christine Lagarde is one of the the president of the ECB, will have more information before the press conference. So she might be saying, okay, after the recent CPI readings and recent GDP readings from the biggest economy in Europe, which is Germany, we decided to do one, two, three. So this will be like the timing is great, in my opinion. So we have the Bank of Japan interest rate decision. We have the ECB interest rate decision. We have the Fed interest rate decision. We have the Bank of Canada interest rate decision all this week. So I think it's safe to call this week the week of interest rate decisions. Okay, so let's move to the next one. All right. We have Friday, October 31st, which will be, in my opinion, a very important day for the simple fact that technically we'll be seeing the close of the monthly candle, um, many of which, I'm talking about the monthly candles, many of those monthly candles are, as of today, they look interesting. So if they close, we might be, if they close like they are looking today, we might be looking at some reversals in some things like the euro, the dollar index, the possibly gold. So let's see how they close. The monthly candles are very important. So Friday will be a very important day, even in terms of the press or the data releases. So the sorry. The first number we have is the CPI from the Eurozone. The previous reading was 2.2%. The forecast is 2.1%, which is lower than the previous. If the actual comes in as expected, we might see like a slight drop on the euro because it means that they can cut rates if they want, which makes the euro less attractive for investors. If it comes in higher than expected or even higher than the previous, this could mean positivity or bullishness for the euro because it means that they will need to keep rates higher for longer, which will be more attractive for the euro. Okay. We also have the numbers from the US. We have the core PCE index, core PCE and PCE. So the PCE previous reading was 2.9%. The forecast number isn't released yet, and the core PCE is 0.2%. The forecast is no change. So this number is, or this reading is the favorite reading of the Federal Reserve. This is their favorite inflation gauge because it's more than dynamic than the CPI, and it takes into consideration substitute goods. So this is their main focus. The Fed will be looking closely at this number to decide the future of the interest rates in the US. Okay, and we have the Chicago PMI. The previous was 40.6, and the forecast is 42. It's still well below the 50 number, as we agreed in several times before. I told you whenever it's above 50, the PMI numbers, when they're above 50, it means that we are in expansion. If they are below 50, we are in contraction. So even the forecast, which is 42, even if it's better than the previous, it doesn't mean that it will be a positive reading for the US dollar because it's still well below the 50, which is the equilibrium. Anything above that is an expansion, and everything below is a contraction. So 42 is still in the contraction territory. All right. So do you have any questions before we move to the charts? I'll give you 1 minute to think of a question before we move to the charts. Hello, hello, chat. Do you have any questions? Okay, I think now let's move to the charts. Okay. Let me check if I'm missing any questions. Okay. Do you have any questions? All right. No questions? Okay. As an analyst, do you give more preference to prelim data or actual data for CPI? Of course, the actual data is more important, but there's that's a very good question actually, because um, the forecasted or the expected data is what drives the market in the first place. And then the actual number rectifies what needs to be rectified. For example, um, if people are expecting, or investors or markets are expecting, sorry, if markets are expecting to see like a drop in CPI, which is inflation, this means that they will start selling the US dollar because they expect a negative reading on something related to the US dollar. So if it comes in negative as well, or lower than expected, this will be even more bearish for the dollar. But if it comes in higher than expected, this could reverse the move. Okay, so as I always say it, markets don't react to what is, they react to what is expected. So markets are forward looking. They act. They don't wait for like the actual rate cut. They don't wait for the actual number to come. They start acting, or they start trading and investing according to expectations, not according to real numbers. So both numbers are very important. But if you want me to answer you, like what's more important, I'd give 60% to the expectations and 40% to the actual number. Okay. And what do you think that gold will drop to as per news of market of 10% rejection? I didn't get the question very well, but what did you think that gold will drop to 3950 as per news of market of 10% rejection? I'm not sure I understand the question. Pearson Hardman, hello, sir. How are you? Good to have you back. All right, so let's move to the charts, and I'll take questions as we go. Okay? You're welcome, Mr. Abi. Okay, so as always, we start with the DXY. Let's take a look at the monthly chart. Actually, here I care about the monthly candle. So that's what I was telling you about just now. This candle is closing in 4 days. If it closes like this, like around 99, or even a little bit higher than 99, we might be seeing like a huge move to the upside. If it closes above 100, that would be crazy, because this could spark a reversal in the downtrend or the correction that we've been seeing for the past, I don't know, 3 years. So this would be huge. Let's move to the next one, which is the weekly chart. Okay, the weekly chart. Also, let's take a look at the price action. All right, so we got rejected from the trend line after sweeping this low. We saw like strong bullish candles. Like we're mostly bullish, so I'm waiting to close above this area, which is the 100, as I told you. Once we do that, I believe we'll start seeing a reversal to the upside. But before that, I'm not gonna assume anything. I don't want to assume that prices will reverse and I start shorting everything against the DXY, because it could like very easily do this. It could just go like this. So no, I don't want to assume anything. I'm just going to wait and see. But most likely we're going to see a reversal. All right. We have 1 point, 2 points, 3 points. Once we break this, it will be like a valid trend line because we need at least 3 points to consider it a valid trend line. So that's that. We need to see it breaking above 99.6. All right. That's for the DXY. Let's take a look at the 4 hours. 4 hours is still bullish. Let's see. Okay. Actually, you know what? Let me just. Uh-huh. So, I'm looking at it this way. It's still above the two major moving averages, which is the 126-day moving average and the 200-day moving average, which is a good sign. It's been ranging for a while, so that's why we see the moving averages right here and the averaging in the middle. But for a while now, for a couple of weeks, we've been above those moving averages, which is a bullish sign. But do we have anything sure for like as of now? Not yet. We'll wait and see. After DXY, we move to Euro USD. Let's see what we have. Okay, loving nature guy is asking something. If US and Chinese officials announce a breakthrough or a framework for a trade deal this week, at what price level is gold safe haven premium likely to be fully unwound? Okay, now it's not very wise to connect one instrument or like the premium of the gold safe haven to one event, which is the trade deal between the US and China. By the way, good that you said that. The gold today opened on a gap or made a gap when it opened because there was actually an agreement struck between China and the US to extend the trade truce between them. So that gave the market a breather, and we saw the gold opening like with a gap to the downside, of course. We'll discuss that when we reach the chart, but for now, I don't want you to connect like one event to the price movement of gold, for example, because gold is so much more than US and China. It's all conflict around the world. It's supply, demand. It's Russia, Ukraine, Taiwan, China, US. It's everything. So you cannot just tie it to one event. I hope I answered your question. Okay. Okay. Now let's look at the Euro USD. So that's what I was saying. I want to see this, like I'm expecting Euro to drop and I'm looking to sell, but not yet. I wanted to see close below this area, which is close below 1.16 for the month. Let me show you. Let me remove the drawing so that you can see. I want to see an engulfing candle here. So that's why I told you Friday is very important. I want to see the closes of the monthly candles because they look interesting as of today. If Euro USD closes below 1.16, I'm going to place my sell limits around the 1.17, 1.1680, and wait for a big drop because we might be looking at a drop of more than, I don't know, 15, 16 figures to the downside, okay? So that's for the monthly. Let's take a look at the daily. Okay, what's happening here? We don't need this. We had like a downtrend here. You know what? Okay. We had a downtrend here, but we broke and we closed above the trend line, and the 126-day moving average, which I mentioned several times before, has been supporting the Euro USD from dropping. So here it supported the Euro USD from dropping. It made it break the trend line, and it came back to the trend line from the outside, which coincided with the 126-day moving average. So this is still bullish, but like how bullish? Maybe we're going to see this level, the 1.1760. So that's pretty much it. What else do we have on Euro? Let's move to lower time frames because most of you guys are day traders and scalpers. So let me try to find you something. For now, as of today, we have an engulfing candle here, we have an engulfing candle here, and the price is pushing higher. So what I would do is look for buys, of course. Um, Look at this. This is an engulfing candle to the upside. We broke above and we're trending upwards. So on the 1 hour time frame, we go here, we see a clean trend line to the upside, which could be a good place to be buying and placing stops below the previous lows and so on and so on. But if you remember from higher time frames, and that's why we trade or we analyze from the higher time frames down to the lower time frames, because when we analyze the higher time frames, we discovered that it could be reaching 1.6, 1.1760 maximum, right? So we have an idea, even on the 1 hour chart, instead of just wondering where should my TP be, you know that the maximum like price on higher time frames that the Euro USD could reach is 1.1760. So that would be your maximum TP for this trade. The trade could look something like this, for example. Uh, you could be like, you could have bought here, you could have bought here, and I'll be waiting for a setup here. But let's look at a setup that has already been done. So you could have just bought here. 1 second. How do we decide the 1 second? 1 second. 1 second. Okay, so for example, 1.16, yes. We go to Fibonacci extensions. We go here, do this, and we have the first target at 1.1660. So that would have been like a great trade, 1 to 4, 1 to 4.6. That would be what that would have been a great trade. But now I'll be waiting for a rejection here to buy. That's what I would do. I hope on USD JPY sell. Well, we're looking at maybe like a very short term sell. Yeah, we could be looking at a very short term sell. Let me analyze it for you. Um, yeah, so it just slowed down and it went back up, and we have like a free range to 158. So I wouldn't be trying to sell USD JPY because it's bullish. It's above all major moving averages and above or outside the bands. So I wouldn't be doing this. I wouldn't be looking for sells. It's still going up. Why not just look for buys? Whenever it reaches here, you could buy and target this area. That's for the USD JPY. Let me check the 4 hours. Okay, what's happening here? Maybe if you go very short term, like if you go to the 5 minute time frame and you see a reversal in this wave here, you might be looking for sells. Yes, it might work. Um, and I see like a weakness here. Like it's getting tired. Let me check the MACD. Let's see the momentum. Yes, as expected, we have a divergence here. Look, the price is doing like is making higher highs, but the MACD corresponding MACD is going lower highs, which means that it's losing steam and it's losing momentum. So to answer your question, on the what's it called, the lower time frames like 15 minutes, 5 minutes, yes, you could find a good sell on USD JPY. Um, all right. So yeah, I'll be waiting for like if I was in your place, I'll be waiting for a reversal sign from here and go down with USD JPY. Yes. Okay. Let's move to GBP. Let's see what's happening here. We go to the monthly chart. How's it looking here? Yeah. So something interesting about the GBP USD, it actually made this engulfing candle. It tried to break new highs, it couldn't, and closed below. Now the swing level would be 1.3120. If this level gets broken, we're going to see a reversal to the downside in GBP USD. That's why, I've been telling you that the monthly candles on like this month's monthly candle are very important because they're closing in very interesting areas, which would maybe spark some reversals. But let's see. Okay, so this is going up, got retested from the outside, and it's going lower and lower. Let's see if we try to connect this, will it work? Yes, it works. And it got rejected from the 126-day moving average, which is a good sign or like a bearish sign. Once we break below this area, which is 1.3130, 1.3120, we're going to see like look how free it is to just go and drop. Okay. So the bias for this week is still bearish on for GBP USD. On Euro USD, it's bullish. So what's a smart thing to do, guys? Since GBP is bearish and Euro is bullish, what do? We go and check the Euro GBP pair because it will be moving faster than Euro USD alone and GBP USD alone, because you remove the dollar and the effect of the dollar, and you just go for the raw connection or raw interaction between Euro and GBP, just like Euro against GBP. You know what? Let me check it for a second. Euro GBP. Where is it? Somewhere around here. Let me check. Euro GBP. Let's take a look at this. So we should be looking. See, we're seeing bullishness on this pair. So everything has to make sense, guys. Everything has, because the markets are connected. So we saw like strength on Euro and weakness on GBP. Look at Euro GBP. What does that mean? It means that each €1 is worth more GBP. So that's why I told you let's check this here. If you just like draw a trend line, we're in a very nice uptrend, still trending up. Let's check the 4 hours. Okay. The current wave is an uptrend, so like a small uptrend. We can see it more clearly on the 1 hour. So look at this. Yeah, that would be a great trade, by the way. We could be looking at something like this. So once this one closes, I'll just like wait for 50% retracement, buy, and my stops here. Or if I want to be more aggressive, my stops would be here. Targeting this area. 1 second. We go here. So I place my buy limit here. Stops below. And TP around this area. Okay, so it's a 1 to 4. That's a very good trade. But to be safe, I'd place my stop here. So it becomes 1 to 1.3. Depends on your risk appetite, depends on the profits you made last week, depends on a whole lot of things. You could choose like the safe stop loss or the aggressive stop loss. So I wish this made sense. Any hope on I sell gold at, okay, good for you. Okay, so what do you think, guys? Should we move now to gold or what? Should we move to gold? Let's move to gold. All right, we go to the weekly. Okay, so let me tell you why I'm waiting for this. What's it called? Monthly. So on the monthly, it's very, very like still very bullish, even after the very big drop that happened last week. Um, any advice on lot size on $100 account? 0.01, the minimum. Shouldn't be going any higher than 0.01. Okay, so back to the chart. Okay, on the monthly, it's very, very bullish. Let's see the weekly. The weekly actually, last week it closed a bit, I don't know, it wasn't the best closure because it closed inside the bands and we might be targeting the 3,930, 3,920. This could be a possibility, yes. But for now, um, I don't want to assume anything. As always, I don't assume anything. I just look at the chart, and as long as I'm in an uptrend, I keep buying. I don't want to assume that price is going to reverse because the general rule is that trend will continue going forever unless proven otherwise. So I'm not going to be assuming that, yeah, you know what, it dropped $400 in 1 day. So you know what, I'm going to start shorting. No, if I have a reversal sign, I would sell. Otherwise, I wouldn't be selling. Let me show you why. If you go to the 4 hour time frame, look, it's been respecting this trend line that has been going since the rally started back in August 2025. So this has been going for more than 2 months now, this trend line. And when it got here, it made a classic reversal pattern, which is the double top. It broke below, and once it broke below, it achieved the target of this pattern, which is around this area. And once that happened, look where it coincided or what it coincided with. It coincided with a trend line that's been intact for the past 2 months, and it coincided with the 126-day moving average, which is a very important moving average, in my opinion. So when do I start thinking to sell? If I see this, if it goes like this, okay, and starts going, if it closes here, yeah, I think it'll be dropping towards this area even, not 3,900. Might be looking at 3,600. Okay, so before this happens, before this break happens and this retest happens, I'm going to keep buying. So as of today, ladies and gentlemen, I'm buying gold. What's happening is the following. Look, here we had like a bullish reversal to the upside. Here we had an engulfing candle. Here we have an engulfing candle. So I think like as a short-term signal, as long as we're above the 4040, which is $4,040 per ounce, we would be still good. This and even if we drop below this, we're still good. But the probability of a reversal to the downside would be higher if we close below 4040. The last, or the furthest stop loss, which could confirm a downtrend or a reversal to the downside, is the breaking of the 4,000 psychological level. On the upside, while it was still going up before it reached the 4,000 level, it got rejected many times from the 4,000 level. It was a resistance, now it became support. So if it breaks that support and closes under that support, then and only then are we looking for sells. Otherwise, we're still in an uptrend. Like we saw this reversal pattern, which is the double top. Usually, how do you measure the target? You go from the top to the neckline, which is $190. Okay, you just go here. Okay, from this area, from the break, you go down. It gave you almost $220. So this target was filled. So this pattern is gone. We're done with it. It reversed this movement. Okay, so this movement has been reversed, yes, but the overall trend that's been going on or intact for the past 2 months, over 2 months, is still up. So why would I be thinking to sell? Okay, someone is saying gold is not my friend. Gold is no one's friend, my friend. No one's friend. And nothing should be your friend on the chart. You trade what you see, not what you love and what you feel. So that's I think pretty much it for today. And of course, the stock market and the US indices are breaking all-time highs, as we discussed in a previous London session. As per our analysis, we said that we're going up, we're going to break new all-time highs, and we're doing that today. I think that's pretty much it. I'll wait for a couple of minutes to answer your questions if you have any. Okay. Hello, Red Wing here. Hello, Red Wing. Good to have you. Okay, Pearson Harbin saying if gold goes to 4,015, I think it would be a good swing buy trade. Yeah, why not? As long as your stops are below the 4,000, yes, you're good. What about Bitcoin? You know what? Let's check Bitcoin real quick. Okay. Okay, so we went back up on Bitcoin after the crazy crash happened 2 weeks ago. We went down to 103. Now we're back at 115,000, which is like still respecting the trend line, the uptrend. Even if you look at the shorter term trend line or the speed line, as we call it, we're still in an uptrend, still doing well. Let's go down to the daily now. Still very bullish on the daily time frame. 4 hours also bullish and above all moving averages, all important moving averages and like major ones, the 100 and 200 day moving averages. In 1 hour, we have a clean uptrend. No shifts in momentum. It's still good. So what I would do is wait for it to reach 113, 700, 113, 500, and wait for a setup here for me to start buying. But overall, it's very bullish, and I think it will be bullish for the rest of the day. Even for the upcoming couple of days, it will be bullish. It still has room to go, and it still has steam to go. Okay, do you trade US 100? If yes, tell us that you know. Okay, someone is saying, do I trade the Nasdaq 100, which is US 100? If yes, tell us the US 100 edge that you know. The best advice I can give you about US 100 is always lower your lot size, because it can and it will surprise you. It moves like crazy. Nothing moves like the Nasdaq 100. So make sure to like always cut your position size in half, because the other half you will need to manage your trade. Okay. Can you check Nasdaq? Yes, sir. I will. Decide short-term daily bias. Okay, you decide the daily bias first of all by like also going top-down analysis. You start with the big picture and you keep going down. If all of them align, it means that, for example, the daily aligns with the 4 hours, aligns with the 1 hour, and all of them are saying that it's bullish, just like what we saw in Bitcoin here. It means that you're most likely going to be bullish. Okay. How to decide? No question. Thank you. You're welcome. You're welcome, everyone. In order to go upward, the next you will buy only. It comes rejects from 40, 35 area, and for short, I will wait to break below 4,000. Yes, that would be smart. Okay, so the last request is to check Nasdaq. So let's check Nasdaq together. It's breaking all-time highs, and of course, you see this gap. This gap was mainly because of the truce extension between the U.S. and China. So we saw like a gap up on the U.S. stock market, and we saw like indices mainly, not stock market, and we saw a gap down on gold. If you look here, you'll see the gap over here, but it just went up and closed the gap with this wick. But this was mainly due to the agreement, or the what's it called? The hope of an agreement between the US and China. That's why we're seeing not only the Nasdaq but S&P also opening on like and breaking fresh all-time highs, whereas the Dow Jones as well, all of them. So basically, nothing much to talk about here about the Nasdaq. We are still very bullish. We're at an all-time high. We have no historical data to rely on in our analysis. So the only thing that we could do on Nasdaq 100 to answer your question, or to give you some insight about Nasdaq, is that you just like wait for pullbacks to buy and continue going up with the Nasdaq. What's my opinion on silver XAG USD? My opinion is that it will continue going up. It just broke an all-time high this month, and I think historically, when silver does that, when it breaks an all-time high, you can expect from 10 to 20% jump in price after the all-time high gets broken. Okay, so I still expect to see it around $60 like soon. We're talking like within like the next quarter, or like even the beginning of next year, which is 2026. I think we're going to see it climbing higher and higher. All right, guys, I think that's it for today. I hope you enjoyed it. I hope it was helpful. Take care of yourselves, and as always, trade responsibly and trade and see you. Bye bye.